Hello and welcome. This is Abhinav. This video is part of a four-part series that I'm doing on what to do if you have failed to disclose your Indian income or your Indian assets in US. Right. So think about a situation where you are a Indian citizen working in the US, maybe on H-1B or maybe even a green card, or a US citizen who has assets or investments back in India, income back in India, and you have not disclosed that in the US returns, maybe willful non-disclosure or a non-willful non-disclosure, whichever the case may be. So, what are your options with the IRS, right? So, let us discuss. Okay, so what a US, so basically, what is the principal rule is that a US tax resident, which means either a citizen or a US green card holder or a person who qualifies under the substantial presence test, right? Who is like residing in US for a significant period of time in a particular year, right? So those people are qualify as US tax residents, and they need to disclose their world income under the US tax law. Also, there are requirements with respect to information returns with respect to the foreign assets. That means any assets that they have outside of the US, they need to disclose in certain returns like foreign bank account reporting FBAR, Form 8938, Form 5471, and there are other reports as well. So that needs to be filed to the IRS. Now, a non-disclosure of those incomes, or a non-filing, or a non-disclosure or non-filing of the reports, information returns, carries significant penalties, right? Uh, so so very high penalties imposable by the IRS on the non-disclosure of assets, which may even extend to imprisonment. If it's a willful non-disclosure, it can also attract imprisonment, right? Now, important thing to understand is that quiet disclosure to IRS is illegal. So now that you understand that, okay, this was a requirement from the past 10 years, you have not been disclosing certain investments in India, and then you decide, and then you decide that, okay, from today, from this year onwards, I will disclose. That is not permitted by the IRS, right? So that is known as making a quiet disclosure. That means forward disclosure. That means from this year onwards, I will start disclosing without telling IRS that I have made a mistake in not disclosing these incomes in the prior years. Because if the IRS discovers that you have made a fresh disclosure of an asset which you have not disclosed in the prior years, and they come to find out that you were having these assets earlier in prior year also, the heavy penalties that can be imposed on you. So now what I'm doing is that it's a four-part series to explain the available voluntary disclosure options. Right now, IRS gives taxpayers voluntary disclosure options that the taxpayers can themselves come forward and say that, okay, this is what a mistake had happened, and I am willing to use those procedures to file the returns, whereby one can expect that the normal penalties that would have been imposed, the penalties under this program will be far lesser as compared to those penalties, and person may uh, not face any criminal charges, right? So this is a four-part series. This is the first part in the series. Actually, I wanted to make one video, but then that video would be very, very long, so I thought of like breaking it into four parts. So those will be four consecutive videos that will come on my channel. Okay. Now, a disclaimer here, important disclaimer. See, I am not a US tax expert. I am not a licensed CPA. This topic is very complicated because there are options that are available. However, every option has its pros and cons. So, I will highly advise you that if you are in such a situation, do consult a licensed CPA or a tax attorney who has experience of handling such cases with the IRS. Now, important thing is that do not think that the IRS will not be able to catch you if, like, you have assets in India and you have not updated the as a US status as a US person under the FATCA declaration in India. So, what you are doing is that you have bank accounts in India, you have not redesignated those accounts as NRO from the fear that you might have to thing put the details under the FATCA declaration, and the details can be communicated back to the IRS. What When you do that, what is happening is that you are already making a violation of the FEMA law. Because if you are a US resident, you are a non-resident as per FEMA, then you need to have your accounts, resident accounts in India, as re-designated as NRO, and you cannot deal in the resident demat account. And FEMA violation is a bigger violation as compared to the tax violation in India, right? Because of various the penalties involved and the, the procedure of compounding and everything. So you may be tempted to what, once you have the idea that okay, I had this investment, for example shares in India, and you think that okay, what I will do is that I will try to quietly close those accounts in India. As a resident account only I will close. So when you try to do that, what will be the problem is that if the IRS, one is that it will be a FEMA violation. That means getting the proceeds of those shares in a resident account, you being a non-resident. Second is that if the IRS gets the information about these accounts, you will not be able to plead that these were non-willful disclosures, because you were trying to quietly close these accounts in India. And these, and even after that, even if you want to put a kind of a non-willful kind of a disclosure option, select that option and file under the streamlined options, it can still be treated as a willful non-disclosure by the IRS and can lead to significant penalties. So this is a topic which requires very careful uh, kind of attention on your part, discussion with a CPA or a tax attorney who handles these cases on an ongoing basis, and then you decide what you want to do. It is always, what I believe is, when it comes to tax matters, and especially when it comes to IRS, it is, and any for regulatory authority, for my from any regulatory authority, it's always better to be transparent. Accept your mistake, that this was the mistake that is there. Pay whatever are the fines, under whichever programs that you can obtain, pay lesser fines, get the thing sorted out, closed, rather than trying to maybe gift the assets to someone else, or trying to put it uh, under the carpet. Because the problem is that, when it comes to foreign assets, every country has very very stringent requirements. Even India has very stringent requirements in terms of black money law, right, which contains imprisonment provisions, a flat 10 lakhs penalty for any non disclosure. Similarly, IRS also has very very significant penalties, which includes even criminal penalties. You can end up in jail, right? So we don't want to end up like that. We want to be compliant, and whatever opportunities that are available to be compliant, you should explore. Don't blindly rely on like many YouTube videos that will say there will be a lot of penalties that you'll have to face. No, if you go for in a proper way, like under the streamlined procedures, there is a very less 5% penalty on the assets, undisclosed assets. So those provisions are there, but you need to just either research those provisions yourself or consult a professional who has a proper idea and who can guide you properly, right? So you should not kind of be lazy and think that to put this off for later. The more you put this off for later, the more the problem will remain and will increase. Also understand this thing, that generally, with respect to the domestic assets, every country has a statute of limitation. That means, like for example, in Indian Income Tax Act, they cannot go back 5 years. IRS cannot go back 3 years, or maybe 5 or 6 years in certain cases. But when it talks about, when it comes to fraudulent non-disclosures or willful non-disclosures, there is no limit. They can even go back 20, 30 years back. For example, in India, if you have the FEMA, they can go back 40 years, right? So you don't have like a statute of limitation, or something happened 30, 40 years back or 20 years back, and then I don't need to do anything now. No, it doesn't like that work like that. So now what IRS prescribes, there are basically several ways that IRS prescribes on how you can voluntarily comply with respect to your undisclosed foreign assets. Now it is not only Indian assets, it can be any assets that you have not disclosed. Maybe they may be in Spain, they may be in Portugal, it may be in UAE, whichever country, right? So what are the various ways? See, basically, there are two things. Uh, Depending upon the type of the non-disclosure, one is a non-willful disclosure, where it was just an error, a kind of a mistake, genuine mistake on your part. There was nothing willful from your end in non-disclosing. There you have certain options like filing an amended return. That means I have covered it in a separate video. That means basically there was an error in the return, that I just forgot to show my particular assets in a particular last year's return. I go back and amend the return. So I've made a separate video on amended return. You can check that video. Then there is a delinquent F bar procedures. There is a F bar reporting, which is the reporting on foreign assets, which is a separate reporting that goes to the US Treasury, right? That reporting, if you miss, there is a provision, there is a relaxation in terms of that you can file a delinquent report and you can just state the reasons why you filed it late. That is possible. So as regards F bar, you can use those options. Then delinquent foreign information return. Now there are certain information returns like 8938, 5471. Those returns, if you have not filed, or 8621, which is the PFIC reporting, if you have not filed that, then you can cover that. Both these things I will cover in part 2 of this series, the next video. Then, with respect to non-willful disclosures, you can opt for the streamlined offshore procedures, whereby you can disclose the assets, pay the appropriate tax, and pay a Title 26 penalty, which is like around 5% of the value of the assets, right? So that is an option, and that you can avail of. That I will cover in the part 3 of the series. And then we talk about the willful non-disclosure. If the non-disclosure is willful and it carries a criminal risk exposure, because if the it's basically tax fraud, right? You were willfully not disclosing certain incomes. If you have such a case, then you can go for the criminal investigation voluntary disclosure practice, that I will cover in the part 4 of the series. So please understand, these are kind of overview videos on the basically what I will try to cover is the eligibility, who can avail, what are the conditions, or what's the process that you need to follow. There are more nitty gritties with respect to your individual situation. You can check with a CPA or an attorney. So this is it. This is the part 1 that I have done. In the part 2, I will be covering about the delinquent F bar and foreign information return procedures. If you have any thoughts, queries, feedback, do share in the comment section in this video. Thank you so much.